Markets are getting ready for the Fed's meeting. Expectations of a slower key interest rate hike have been shaping traders' sentiment for more than a week. In this light, the US dollar dropped to its 5-month low against the basket of 6 major currencies. Today, the US will disclose its producer price index data. That will point to changes in consumer inflation, which has a direct influence on the Fed's decisions. The fact is that the greenback was boosted by the regulator's aggressive monetary policy aimed at combating high inflation. However, the situation has changed. In our video review, we will talk about this and other events that may affect the market sentiment early next week. High inflation and measures that are implemented to combat it, namely the interest rates hikes, are causing a decline in consumption. This, in turn, may lead to a recession in all developed economies driven by the services sector. On Monday, the UK is going to disclose its GDP report for October. Notably, in November, the Bank of England admitted that the UK economy had already tapped into recession. However, judging by the forecast, the British economy is still resisting the process. Thus, economists suppose that in October the UK economy expanded. What's more, the UK industrial production may show a smaller decline of 2.7% on a yearly basis compared to a decrease of 3.1% in the previous period. And this data may encourage traders who have already started buying the pound sterling amid changes in the budget spending plans under the leadership of the new government. However, not all reports that are slated for release in the UK are expected to be positive. On Tuesday, the UK will publish its claimant count change that may reflect the worsening of the labor market conditions. In this case, traders may start selling off the pound sterling. The euro also needs a correction, but there is no reason for that. On Tuesday, traders may also get another signal to buy the euro. Thus, Germany's data on economic sentiment may encourage traders. The indicator is expected to rise, though remaining in the negative zone. It means that business is adapting to the current conditions, including high prices, low consumptions, and expensive loans. Expectations of the US inflation figures also prevent the euro from a decline. According to the forecast, inflation may slacken to 7.6% from 7.7%. However, traders remember that last time the data was considerably better than the predictions. That's why it's quite possible that figures for November will be closer to the target level than analysts suppose. Notably, the Fed is actively combating high inflation by raising the benchmark rate by 75 basis points. Now, when inflation has started slowing down, there are more and more speculations about the Fed's intention to raise the interest rates by only 50 basis points. On Wednesday, the UK will also unveil its inflation figures. The Bank of England is expected negative data. We have already mentioned that the Bank of England has already announced that the country entered a recession, which is expected to be long and deep. The Bank of England's representatives also believed that inflation had not reached its peak yet. However, the situation is a bit different. Now, most analysts suppose that inflation will slacken to 10.9% from 11.1%. However, the predictions will hardly meet the reality, and inflation may continue to accelerate, forcing the Bank of England to raise the benchmark rate higher. In the United States, the situation is the opposite. There, inflation is slowing down, thus allowing the central bank to switch to a less hawkish stance. Jerome Powell has already hinted about the regulator's intention to slacken the pace of the key interest rate hike. Against this backdrop, the greenback decreased against all other currencies. You have watched Forex Trader Calendar on InstaForex TV channel. We wish you profitable trading with InstaForex and see you soon.